I think the community aspect of trading, it's really to kind of protect yourself from yourself. And because it's easy, when you can get into this closed loop. And if you're just by yourself and trading, you can convince yourselves of things that just aren't happening. And, it's just, you're just going to get this feedback loop that just makes, everything you do doesn't work. And it's like, okay, well, what am I, why? What am I seeing? What am I doing here? What am I not seeing?
The squeeze, unbalanced butterflies, zero DTE options, anchored VWAP. These are just some of the trading concepts, strategies, tactics, and vehicles you'll come across on Simpler Trading's website and X feed. But what are they? How can you use them to maximize your own returns? Why are so many of today's traders turning to community-based help and mentorship? And what are key indicators saying about the health and future direction of this market? That's what we'll cover in this week's Money Show MoneyMasters Podcast. It features one of the sharpest traders in the business, John Carter, founder of Simpler Trading. Welcome to the show, John.
Thanks for having me. Good to be here.
Yeah, glad you could do this. Why don't just for people who might not be familiar with your background or Simpler Trading, why don't you talk a little bit about how you got into this business and what it is that Simpler Trading does?
Yeah, I got interested in this. My father was a stockbroker, and so I kind of hung around it as growing up as a teenager. And then at some point I got into the working world and started doing the math like, wow, I'm, making X amount of salary per year, but in trading, I might make $1,000 or $2,000, here and there. And it just made a lot more sense. And so that really got me onto this path. And it took about 8 years of ups and downs, great ups, horrible downs to kind of get into this thing of, okay, let's look at things like asymmetrical risk, i.e. butterflies. Let's look at things like, just kind of how do you do this in a way where, you don't get kind of trapped by, your own emotions and dopamine addictions and things like that. And so the idea with Simpler Trading is I kind of call it a human AI based community where you have a lot of traders from different backgrounds with different perspectives on the market. And all of us are kind of offering our current picture of the market, the opinions we're expressing based on the trades that we're taking on what we think the market's going to do, and then just using our experience over the years. We'll see somebody come in and they'll get really excited about something, and they're you can tell that they're doing the wrong trade, and and we just try to save them that heartache of the biggest thing I'll see is somebody gets on a good streak, and instead of attributing it to just probabilities and where they are, suddenly they're a genius, and then all this money they made goes away, and that's always heartbreaking. And so there's things like that we see and try to prevent, and just make it a community. Trading is always about, it's all about the next trade. The previous trades don't matter. It's the next trade. Are you present? Are you in alignment with what's happening, and can you execute in a non-emotional way?
Got it. I'm definitely going to talk about the big picture for the markets in a minute, but I do want to kind of zero in on the point you're making there. What are some of the mistakes that you see traders consistently making in this market in particular? And what is it that you try and do to help them break them out of that pattern?
Probably the biggest thing is that somebody will read an article about something that was bad news, about the economy. And then all of a sudden they're like, you know what, this market's going to crash. And then they put all their, their entire account on puts on SPY that expire in 4 days. And then they just don't understand why the market keeps going up. And so that's probably the biggest thing is you get somebody, you read something, you get an idea of what the market should do, and then you try to impose your will on the market. Of course, the market doesn't care, right? And so that's probably the biggest thing. And then from there, it's just kind of understanding like, hey, if you're bullish on Tesla, and especially if you're doing options, there's different ways to kind of structure the trade so that you have a better probability of success. Something like, buying a Delta 10 call works. When it works great, but it's a very rare time that it's going to, it's going to work great. And so it's just kind of getting into the idea of creating a consistent income from trading instead of always chasing, the big hit and things like that too.
Yeah. Well, it's interesting. I know Jonathan McKeever couldn't be with us, but one of the things I saw him post on Twitter the other day, a couple of weeks ago, was he wasn't seeing a lot of good setups. The market wasn't doing much. And he's like, this reminds me, I just need to be patient. And it seems like that's a good bit of advice too.
Yeah, and Jonathan's really good about that. He's brought in, his experience in the Air Force. He has brought in a lot of discipline, and he's kind of like, look, if it gets to this level, I'm going to take action, and if it gets to this level, I'm going to take action, and if not, I ain't doing nothing. I don't think he says the word ain't, but it's But that's a really good discipline approach. And that's probably, the final piece of the puzzle for a lot of traders is just to learn to be patient, wait for that fat pitch, because if you're not, it's easy to get distracted, and you can be, distracted on some trade that you really shouldn't be in, and you're trying to work your way out of it. Meanwhile, you're going to completely be distracted and miss the fat pitch that's setting up at 9:30. And you're just going to miss that because you're, pilling around with this little thing. And that's a very common thing I see as well.
Now, I want to talk a little bit about the idea of using kind of this community-based feedback and coaching for traders. I mean, I've had other speakers I've talked to, and people have run apps where you can bounce ideas off each other and use social media and so on. That seems a lot more popular these days. I'm just kind of curious as to why that is and what's more effective about learning that way versus some of the other things you can do to teach yourself trading, read a book or whatever.
Yeah, and I think it's good to have a little bit of both. But I think the community aspect of trading, it's really to kind of protect yourself from yourself, and because it's easy, when you can get into this closed loop. And if you're just by yourself and trading, you can convince yourselves of things that just aren't happening. And, it's just, you're just going to get this feedback loop that just makes, everything you do doesn't work. And it's like, okay, well, what am I, why? What am I seeing? What am I doing here? What am I not seeing? Well, if you've got a group at least, and it's not about, a herd mentality, it's, it's like, hey, I think I'm going to, Tesla gapped up this morning after earnings. It's up 30 points, and someone in a room was like, I think I'm going to sell call credit spreads here. And we're all like, you're insane. Like, the stock has had a 2 times expected move for a reason. It's being revalued. Why would you want to step in front of that? And, I was like, trading is a lot like, if you're walking in the woods and you see a rattlesnake. Just because you see the rattlesnake doesn't mean you need to bend over and pick it up. And it's probably not a good idea. And it's in trading, you can look at a chart and you can always find a reason to trade. But the reality of it is, you want to just hone in and identify what are the high probability setups. And a lot of times that means patience, specific things to wait for, instead of just willy-nilly like, oh, if the stock's up, I'm gonna short it.
Yeah. Well, let's talk about a couple of the tactics. I mean, you briefly touched on butterflies earlier. You mentioned obviously the squeeze is something you're known for. I mean, how do some of those processes work, and what's the the benefit of getting involved as a trader?
Well, on something like the squeeze, which is nice, and this is something I noticed a long time ago, is that about 80% of the time, the market actually doesn't do very much. It's kind of stuck in a range, and 20% of the time, it'll have these fantastic moves. And the challenge is that if you get into this period with these fantastic moves, and then you keep applying those strategies to a time when the market is quiet, you're going to get killed. And so what the squeeze is simply an indication of, hey, the market has gone through a period of nothing. It's now gotten to the point where the volatility is compressed, that it's going to have to release energy. So what it's doing is it's pinpointing for you the moments in time where you're much more likely to have these bigger moves. And so that's what I like to wait for. And so, I'm certainly looking for that on the indexes, but if there isn't one on the index, then yeah, I'm going to go look at NVIDIA, is there one on Tesla? But the best kind of trades are when the indexes are in a squeeze, and then kind of the strongest stocks and the strongest sectors are in a squeeze. And if you can be patient for those, you can make more on those trades, that can make your month or your quarter, versus just trying to scalp here and there for nickels.
Yeah. I want to ask another question about investment vehicles. I mean, obviously we've gone from quarterlies to monthlies to weeklies to daily options. We used to have ETFs that had 1x, 2x, 3x, and now there's levered individual stock ETFs, which kind of eliminate the whole diversification. What are your thoughts on all these developments? Are they positives? Are there new risks involved people need to be aware of when trading this stuff?
Well, the biggest thing that's happening that I've noticed is that, especially with the 0DTE SPX, is that it allows a lot more hedging capability. And so what will happen now is that if someone, say, mostly funds, so if they've got a big long position, instead of having to sell in and out of it or buy longer dated puts, they'll just buy puts for today. They're going to hedge their risk for today because it's so cheap to do it day by day. And so that absolutely controls the market. And I think it's one of those things where we just got to realize that from a day-to-day basis, we're really just kind of in this, as retail traders, we're in the middle of this Goliath amount of hedging that's going on. And so, once in a while, yeah, you're going to get some kind of a nice move, but today, there's a lot of hedging around 5,800. What do? We hung around 5,800 on the SPX, even though, Tesla's up 50 points on the day. So that's the biggest thing, is that this market isn't about buying and selling. It's much, much, much more activity about hedging and protecting large portfolios.
Okay. let's pivot a little bit to the broad markets then. I mean, I have everybody from economists, strategists, fund managers, sector analysts on the podcast. But obviously, you're a technically driven trader, and so you're going to look at things differently. What are you seeing out there in terms of kind of evaluating this market and its health or lack thereof?
Well, I think it's one of those things where there's certainly a lot of divergences happening in the market right now, all over the place. We've had a great run. The markets, I do think we're kind of at a point where, it's time for the markets to catch its breath. I mean, as we're talking right now, the S&Ps are about 5,800. I think we're kind of near the upside for the near term, and there's more risk to the downside, especially, there's going to be certainly that hurry up and wait for the election, which is only now 3 weeks away.
Yeah.
A little bit of hurry up and wait for that. So, I think we're going to kind of be a little quiet into the election. We'll see some volatility after it. And then from there, it just kind of goes back to how's the business environment? Are we are we hiring? Are we lowering rates? All those different things. But I do think that the magnificent up moves that we've seen are certainly going to take a breather.
Yeah. Yeah, because that was going to be my next question. Is obviously, everybody talks about seasonal, Santa Claus rally, whatever. But I mean, I was kind of curious if you thought we sort of used that gas up already or not.
I lean towards that. I'm always willing to say I stand corrected, and especially if the market's making new highs. But I do think that the markets are smart. They front run things. The idea that I think like rate cuts and things like that have already been priced into the market, and there are times when the market reaches a certain point, it just needs to cruise and catch up for a while, and that's kind of where I think we are.
Yeah. Let me shift to a couple other things. I mean, you've talked about gold, and obviously, when we've had you at a couple of previous events, you did identify that as being a positive pattern and a positive outlook, and clearly that's paid off. What are your thoughts on things like gold, which has run quite a bit this year, obviously?
Yeah, well, I think gold is front running the next move by the Fed, which I do believe in about a year or so they're going to have to start back into heavy quantitative easing, and so gold is really good at front running that. And we're sitting here getting close. We're probably going to kiss 3,000. For a long time, we saw gold kind of sitting between $1,600 and $1,800 an ounce. That has stair-stepped up, and I think the new kind of normal is going to be $2,400 to $2,700 an ounce is kind of a base, and then it just keeps working higher from there. It's something, it's one of those. I personally am not a fan of trading the miners, and I know a lot of people are. I will trade gold, whether it's GLD or gold futures, and then I collect coins like rare coins, pre-1932 gold. So I do like, stacking the metal, but I think it's one of those where the biggest thing that's going to be coming forward is a kind of a loosening of liquidity. That's a currency debasement for the dollar, and things like gold go up in that situation.
Okay. In the time we have left, I mean, anything else that I haven't mentioned that looks particularly either promising or dangerous to you, given kind of when you look at the markets overall?
Yeah, that's interesting. I mean, I like the term promising and dangerous, and I think that in looking at this, I think the biggest thing we just have to look at is interest rates, and I think there's maybe an assumption right now that there's going to be all these rate cuts and everything's going to be all rosy again. But what's interesting is after the last rate cut, interest rates have come right back up again. And so there's this underlying, the economy is strong. There are, inflation is still kind of out there, although I think it's over. We're not going to see a 1970s repeat. But I think the danger here is just assuming that with rate cuts, the market's going to go straight up. I think the market's already priced a lot of that in, and this becomes a trading market, literally. And I'm always a fan of, long term, dollar cost average, throw money in an index fund. But for trading, we're entering an environment where you just want to be flexible. It's not always buying the dip. Sometimes it's going to be shorting the rally and just making sure that you're kind of fluid in that environment.
Last question then. I mean, obviously, you're going to be joining us for the 24 Money Show Masters Symposium. It's going to be in Sarasota this December. Can you give viewers who are watching this maybe a sneak peek at what they're going to learn when they attend your session or what you might be talking about?
Sure. There's two things I always like to cover. And one is kind of what's setting up right now. Like, okay, these are trades I'm going to be taking, like I think, I'm probably talking on Thursday or Friday. I'm going to talk about trades that are setting up for the next week and then next month and exactly kind of what I'm looking at there. But I also like to talk about kind of the bigger picture, because there are things like the real estate cycle that's actually, the next 18 and a half year real estate cycle is coming to an end in the next year or two. The last time that happened was in 2008. So what is that setting up for now? What opportunities could that create? And so a combination of kind of macro, kind of where we are and the bigger term opportunities that's going to create, and then just kind of coming down to what are some good trades over the next couple of weeks? What sectors? What specific stocks? And I think it's a good way just to kind of look at the overall market, learn about a specific strategy, and then see how it's applied to specific stocks.
Perfect. Well, that's a great place to wrap up. John, thank you so much for your insights. Viewers, if you're watching this, you want to learn more from John, learn more about simpler trading, definitely join us at the Money Show Masters Symposium. It's in Sarasota, December 5th to 7th. Hyatt Regency downtown, which made it through Hurricane Milton just fine. If you're wondering, we've gotten that question a few times. So it's going to be great time, great environment. We look forward to seeing you there. John, thanks again for joining me.
For sure, and looking forward to it. It'll be my first visit to Sarasota, so I'm looking forward to that as well.
Excellent. We'll see you soon.
All right.